Hey friends, in this video, I'll be reacting to Chicken Genius public trades on Twitter. By the end of this video, I hope to learn a thing or two about trading options in our current market conditions. I must first disclaim that I'm a donkey. I've only learned options trading in the past 6 or 7 months. This video will be me attempting to try and understand what these very experienced individuals are doing when it comes to their trades. If you don't know anything about options trading, I'll recommend you to skip this video. I'll link a lot of resources of where I've learned options trading from people such as Kelvin Learns Investing, or Options Millionaire, Tasty Trade, Adam Khoo. I think these are great resources to start, and I myself have just started in this journey. I will likely make a lot of mistake and wrong interpretations of the numbers over here. If anyone is experienced in options and generous enough, right, please do correct me. This video is me trying to understand what Ken is doing on his trades. On 30th of January 2022 last year, he posted this tweet, and this is my first time sharing active strategy uncomfortable. This is advanced stuff, oh no. I had multiple requests and I want to inspire that it can be done. Spreadsheet to share my progress transparently starting today. Wow, I would say not many people are very transparent to share this as well. Basically, he sold an 1-to-1 put option that will expire on 13th January 2023. Funnily enough, a few days after that, after he made the trade, 2 days later, right, he then tweeted, the consensus now is that Tesla is going to miss its deliveries, shit down below $100 even among the bulls. I think he's forecasting that Tesla will be below $100 very soon. So the current price of Tesla right now, as of the 4th of January, would be $108. So if you see here, 29 December is where he made the trade, where the amount of volume looked very good. It did not seem to break out from this simple moving average of 7 days. And I think on 3rd January, this is when the markets opened and the price then just tanked accordingly. Going to his Excel sheet, I think this is very interesting to me. To be honest, I don't know 50% of what he has wrote here. He has wrote strategy max decay swing stock. So there's all these strategies that he has elaborated. Bull confluence, blue anti-confluence. If I'm not wrong, I think he has executed a bull anti-confluence, because I think this is an option that will expire in 2 weeks from the 29th December, and he's selling at the money put. So selling at the money puts, I think given that high delta, right, he'll receive a lot of premiums from there. So he actually had 18 contracts. My god, that's a lot of contracts. Let me do my calculations as a newbie. For all those people who don't understand options, right, when you sell a 1-to-1 put option that will expire by the 13th January, you're promising that you will buy 100 Tesla shares at $121, and this promise will be valid until the 13th of January. In the case where if by 13th January the price of Tesla is below 1-to-1, he would have to buy 100 Tesla shares at 1-to-1. Of course, the only thing that you want to hope for would be Tesla share being above 1-to-1. So that itself is only one contract, and he had traded 18 contracts. My god, this guy is rich. So 18 contracts. So for a particular layman, right, I assume that it's a cash covered put, or I'm not sure whether he's using margin, but a person rich like him doesn't have to care, I guess. One contract. So 1-to-1, 100 Tesla shares. This is one contract. So one contract, right, he has to prepare 12.1k. Ideally, he should have 12.1k ready to buy 100 Tesla shares if it drops below 1-to-1 by the 13th January. So he has 18 contracts. My gosh, so wow. I'm guessing he has about $217,000 ready to buy a lot of Tesla shares. Alright, so more importantly, I think premiums. The premiums that he collected, basically the money that he collected from selling this insurance, right, would be $900 per contract, because $9 is for one stock, so that's for 100. Okay, so this is the part where I'm not too sure of, right? I think if he sold it at $9 each, right, if he collected $9 for each trade, that means $900 per contract times 18. Because there are 18 contracts, so he collected $16,200. But unfortunately, a few days later, right, he decided to close his option and buy back the option, so he bought it back at $13.50. If you're buying back 18 contracts, that means he will have to pay $24,000. If I'm not wrong, someone in the comment section, please correct me. Again, I must say I'm a new options trader here, so I need to really break down what he's doing. He essentially lost out $8,000 100, and the remarks he has put stopped out. So I guess that's one thing actually I don't see a lot of traders do, to be very transparent. A lot of people say, oh, they earn a lot of money via options trading, right? But the true fact is, right, if you make a bad decision, right, you can really lose a lot of money, and I appreciate that transparency from Ken. What I'm more interested in is his other trades on other stocks such as Starbucks, Amazon, SPY, and Baba as well, and I'll slowly go through this one by one. I don't think he has put a lot of explanation or his thought process of why he chose that, but I'll try to understand why he made these decisions. So okay, let's move on to the next stock, Starbucks. He made the trade on 3rd January, which was yesterday. The date that I'm making this video is 4th January, right? He sold a call option which would expire in 13th January. So I'm thinking this is a naked call option. For beginners out there, I think this is a very dangerous thing to do, but I think he knows what he's doing, right? 20 contracts, there's a lot of contracts. Premiums, $2.36. For any beginner options trader out there, right, I think the step number one, right, you need to do all the math just to make sure you know how much money you're earning, because that's very important. And more importantly, you need to track how much you're losing. So I'm really going through the process manually over here, right? For one contract, so he basically collected 4,700. Remarks, he said SL, I'm guessing the stop loss is at $102. Profit target $80. If you're selling a call option, it means that you don't think the stock price will exceed $100 by 13th January. So let's take a look at the particular stock price for Starbucks. Based on yesterday's data, right, it's quite fascinating. The stock price of Starbucks as of 4th January is at $108, right? So let me try and understand his thought process of why he made the decision to sell call. What gave him the conviction to sell calls on Starbucks? For me, I do very, very simple technical analysis, right? It looks like it's very far away from the simple moving average. But in terms of volume, it looks very healthy though. So I wonder what happened yesterday. Sometimes they have these news notification on TradingView, right? So I actually click on them. Starbucks reportedly declines union contract talks at 21 locations. Yeah, I have no idea. Actually, I really have no idea why it increased yesterday. But the volume of it looks good. There is an increase in volume, but an increase in volume, right, did not result in a proportional increase in stock price. Volume price analysis is something that I'm trying to learn as well. I might be wrong, but in general, right, if there's more volume of people, right, the stock price should increase proportionally. But there's a battle between the sellers of the stock and buyers of the stock. If there's relatively so much more volume, right, the stock price should have increased if there's no one selling. But because the stock price did not increase, right, this might indicate a weakness in the market, which shows that there might be a possibility, right, that it might actually drop all the way down and revert back. So I think this is what Ken is doing. His stop loss is at $102. So I would say, yeah, he's very conservative. If you put a stop loss at 104, 105, I'm probably guessing you'll lose a lot of money. Having such a close stop option, right, that means you won't lose a lot of money. So I think that's part and parcel and very important for any trader, right, is you want to always manage your losses as much as possible, like how he managed his trade for Tesla, right? Based on my calculations, he has lost about $8,000. I'm guessing that's peanuts to him, right? But I think for any trade, it's very respectable that he has put stop losses in place, and his profit target is at $80. So his guess, right, is that it would drop to $80. If you sold a call option, right, then you would definitely be very, very profitable. Yeah, so I'm thinking of copying his trade as well. That's my hypothesis. Of course, there are other macro factors which might affect his decision on why he thinks that Starbucks would drop. There's a lot of information here, right? Truth to be told, I don't actually know what all this means, right? I'm guessing this is his decision thought process and his weightage on how he judges the overall markets, right? 10% will be the fundamentals. To be honest, oh my god, if there's anyone in the comment section willing to really go through and teach me this, right, I'll be forever grateful, to be honest. Because this looks freaking complicated, so I definitely need more time to go through it. I'm actually still currently in the midst of trying to learn the relationship between like interest rates, bond yields, and how the market interacts with each other as well. I'm not very familiar with this. These are all his strategies accordingly: buy, hold for dear life, hedge, cash. Yeah, majority of his strategy is already in cash. Yeah, so Starbucks, maybe I can make a follow-up video on whether this comes to fruition, whether he's able to make this prediction correct, because I would say from a technical analysis standpoint, it's very far away from the moving average. So usually there would be a correction if it gets too far away from the 200-day moving average. So maybe that's one of his decision thought process. I have no idea, but this volume indicates it's quite fishy to me. This might be an indication of why he actually entered the trade for Starbucks. So that's my thought process. Please correct me if I'm wrong. Okay, let's move on to the next stock, which is Amazon. Amazon, he sold a put option at an $85 strike price, which will expire in 13th January. One thing I realized about his trades, right, is he always sells a 2-week put option. Personally, for me, I find it a bit risky because I always sell put options maybe 30 days out or even 40 days out just to be a little bit safe. But yeah, I think I have definitely a lot more to learn when it comes to selling put options and being more confident in terms of predicting where the stock price will go as well. Over here, he collected a premium of $2.08. He actually closed it immediately, and he said that SPY was weak. So over here, I have the Amazon stock price, and he sold a put option for $85. So essentially, he's betting that Amazon will go even lower than $85. I'll be honest here, I actually don't really understand too much of the thought process of why he made the decision to sell a put option over here. He he said SPY looked weak. So when it comes to SPY, right, I think we are at a consolidation phase as well. So we haven't been seeing a lot of price movement. And I think the reason why he made the connection with SPY is that SPY, if you're unsure, is the top 500 companies in the United States, right? So the performance of SPY is affected by many different sectors. These are the specific sectors that the SPY is made up of. XLB, which stands for the materials industry, healthcare, XLV, technology, XLK, financials, XLF, and so on and so forth. So when there is a price movement in, let's say, Apple, Tesla, or even Amazon, right, it affects the price of SPY as well. Based on my understanding, right, if let's say Apple spikes up in price drastically, let's say over one day, right, then that would also will somehow have an impact on the S&P 500, and that may also cause the SPY prices to spike up as well. So in this case, right, maybe when Chicken Genius said that SPY is weak, right, the only thing that I can really point to is maybe volume. There isn't enough volume to substantiate the subsequent drop in price for Amazon, because he's betting that Amazon would stay below $85 until the 13th of January. To be honest, I don't have a strong understanding of why he made the trade. That's the thing about trading, right? The same information is presented to different people, but of course, I'm super inexperienced, right? The way I see things is not how probably Ken sees it or how many other experienced traders would see it. So that's the thought process of Amazon. He collected $6,000, $160, and paid back 5.9K. So I think he earned about $200, if I'm not wrong. But because he said SPY looked weak, I think that's why he closed the trade. But I'll be curious to know why he said SPY looked weak. So if there's anyone in the comment section below that can enlighten me, please do so. Thank you very much. SPY, he sold a call option that will expire on the 17th of February. And this is almost a 30-day option. He sold a call option. So let's look at SPY. SPY, 380 call options, 380. Yep, so when he says at the money, he really sells it at the money, I guess. And I think that's where you actually really earn a lot. If you really bet on the correct direction of where the stock price goes. Failed breakout. Okay, from what I'm seeing, he's still in a trade and it failed breakout. What does failed breakout mean? Oh my gosh. Usually how I'll interpret breakout, right, would be like there's a moving resistance and it will try to break the moving averages accordingly. Sometimes you can draw a support and resistance line accordingly. Maybe this was a breakout he was talking about. Like the stock price did drop until about 379. It went back up to 387. It failed to break out of this, I would say, 50-day simple moving average, right? So it failed the breakout, and that's why he thinks that it would actually go down. To be honest, I have trust issues with news. There's this book I'm reading about volume price analysis. I'll leave it in the video description. So they say that all the articles and news that you see, right, is just market manipulation of all these hedge funds, right, and trying to drive the prices in the direction that they want and screw retail investors. I'm not sure if it's correct or wrong, because based on one of the YouTubers that I follow, only about 14 or 15% of all the investors in the world are retail investors, which means that up to 80 to 85% of all these volume, right, is actually constituted from all these hedge funds that has billions and trillions of dollars to trade on. So let's say they have a lot of money and you definitely don't want to trade. I'll take all these news with a pinch of salt, and I'm guessing that Chicken Genius also looks at all these macro factors in terms of making his decision. That's the only thing that I can pull out from this SPY. I would love to have a greater understanding of what are the other factors that he has thought of when it comes to making his decision. I'm guessing it has to do with these things as well. The macro regime, QT, all these things that Chicken Genius or Ken has been saying in his YouTube videos. Alright, Alibaba, let's see here. So the call option that will expire on the 13th of January. He says that it is overbought. The indicator that I use here is called stochastics. So when it's usually above 80, I guess it's overbought. It's also approaching the simple moving average on a 200-day basis. That might be an indicator that I would sell a call option on. The volume of here looks very, very healthy though. The volume on 30th December was about 11.9 million, and the volume on 3rd of January was at 27 million. How I like to think of volume, right, is just the amount of people on the trading floors trading this particular stock. So there's a lot more people buying over here. So maybe that's the reason why he says overbought. This candle is, I'm not sure if this is called a shooting star candle. Let's see if it's a shooting star candle, right? I think there is a little bit of a shooting star candle. I think this is similar to one of the previous stocks that I was explaining. Maybe Starbucks, right? There's a lot of volume, but then there's also a healthy volume of sellers in the market, and not everyone is buying, because if you have a proportional increase in volume, you should have a proportional increase in price as well. And if the price is so little, that indicates that there are actually people selling. That's how I interpret this trade to be. So he says he's overbought. Chicken Genius, he sold 22 contracts, right? I'm curious, how does he come out with these numbers, 22 contracts? Maybe there's a minimum amount of money that he wants to earn per contract. I think he got $8,000 premiums for it. So if this decision is correct, right, you'll earn $8,000. Yeah, he definitely has the balls to make these kind of trades because he has a lot of money. I myself, I've just started my journey of options trading, right? So I definitely don't have these kind of options trade, but I am seriously considering to try follow what he does. I guess that's it for this reaction video on Chicken Genius. I guarantee that I've made some errors in this video, right? So please, if you know options trading, I would really beg you to correct me in the comment section below because I've only started my journey learning options trading. I think it's fascinating. And if you're new here, my name is JJ. Learning is just something that I love, and I just want to document my journey in terms of learning options on this channel. And if you're new here, please do comment and subscribe, and it will mean a lot to me. That's all for this video, and I'll see you in the next one.